Hello and Assalamualaikum. Today we are going to be presenting about expectation gap in audit. We are from group 2. And this is my team members. My name is Zikri Amir Mustakim bin Zaimi.
Hi, my name is Nurul Syafiqah binti Mazli. I want to present about the introduction of audit inspection gap. The purpose of my ID is to provide the fair financial statement for a company by vetting all the relevant information. The audit inspection gap, which refer to the auditor responsibility regarding the difference between the financial statement, user belief, and what auditor are obligated to perform according to the existing standard. The government has taken several actions to enhance the accountability of audited financial reports, such as conducting rigorous inspection of audit quality. This will make the audit team can enhance the auditor independence and communication. To investigate further, the auditor conducts several studies in a country, namely Bangladesh, which is experiencing a crisis in independent auditing following the enactment of the Financial Reporting Act in 2015. The objective of this study is to explore the factors contributing to the audit expectation gap, thereby assessing the impact of confidence on stakeholders and the role in reducing the audit expectation gap.
My name is Mafaiza Diana binti Nasbo. I'll be talking about the audit expectation gap, a concept that highlights the difference between what the public expects auditors to do and what auditors are actually required to do under professional standards. This gap exists because there's often a misunderstanding of the auditor's role. Many people, including investors and other users of financial statements, believe that auditors are responsible for detecting all fraud or guaranteeing the financial health of a company. But in reality, auditors are only expected to provide reasonable assurance that financial statements are free from material misstatement, not absolute certainty. To understand the audit expectation gap better, there is two key perspectives. First is the unreasonable expectation gap. This happens when the public has unrealistic views about what auditors can accomplish. For example, expecting auditors to prevent company failures or catch every single fraud. Second is the sensible expectation gap, which is more reasonable and can be broken into two parts. The first one is the performance gap, which is the difference between what society reasonably expects and how well auditors are actually performing under current standards. And the standards gap, which questions whether the existing laws and auditing standards are still appropriate or need to be updated to meet fair expectations.
Hello, my name is Nur Danila Tira binti Mokshari Hamdan, and I will present the types of audit expectation gap. There are three main types of audit expectation gaps. First is the knowledge gap, which happens when the public misunderstands what auditors actually do, often due to limited awareness of the audit process. This can be addressed through better public education. Second is the performance gap, which arises when auditors fail to meet the standard they are supposed to follow. This can result from negligence or lack of effort and often leads to lower audit quality. Finally, there's the evolution, which is the gap between what current standards require and what society now expects from auditors, like addressing new risks or using advanced technology. Understanding this gap will help improve trust in the audit process. I will present the impact of the audit expectation gap on stakeholder confidence. One major consequences of the audit expectation gap is a disconnect between what auditors actually do and what stakeholders expect them to do. Auditors are only required to provide reasonable assurance, meaning they assess the financial statement to a high but not absolute level of certainty. However, many stakeholders assume that auditors are responsible for completely preventing or detecting all error, irregularities, and even fraud. This mismatch is the root of the expectation gap. Next, the impact of the expectation gap. So, what happens when this expectation don't match? It causes stakeholders to question the accuracy and validity of the audited financial information. As a result, confidence in the auditing profession declines. People begin to feel the auditors are not doing their job properly, even though in reality, auditors are meeting their actual responsibility. This is clearly supported by Hypothesis 2 from the article, which states the greater the expectation gap, the lower the stakeholders' confidence in auditors and the audited financial statements. It shows that as this gap widens, trust in the audit process decreases. That's why reducing the audit expectation gap is so important. By educating stakeholders about the real scope of an auditor's role, we can build more realistic expectation. This helps maintain trust in financial reporting and also strengthen the overall quality and credibility of the audit profession.
Thank you to Daniela. Now I'll be discussing the strategy to reduce audit expectation gap in audit, a long-standing issue in the accounting and auditing profession. This gap arises from misalignment between what stakeholders expected and what auditors are actually responsible for. As a result, it can lead to reduced trust in financial reporting and lower confidence in audit outcome. To address this, various strategy has been proposed focusing on improving communication, accessibility, regulatory control, and professional standard. To reduce this gap is essential, not just for auditing profession, but it for restoring stakeholder trust and ensuring more reliable, transparent financial reporting. Now, let's move on to key strategy to reduce the gap. Firstly, we can enhance communication by using simpler language in audit report, clearly explaining audit scope, limitation, and assurance levels, and conducting workshop for stakeholders. Second, strengthening auditor independence and ethics is vital. By enforcing strict rules on conflicts of interest and non-audit service, we can promote trust and reduce misunderstanding. Third, we need to improve audit standard and practices by standardizing reporting format, aligning with international quality controls, and focus on areas like fraud detection. Fourth, the development of clear standard and guidelines, especially for non-financial disclosure like CSR, helps set more realistic expectations. The fifth one, regular regulatory oversight from bodies like the Financial Reporting Council ensure the audit firm comply with professional and ethical standards. Sixth, we should invest in education and professional development. It is to training the auditor in communication and educating stakeholders about what audits truly are. And last one, using enhanced reporting technology such as digital and interactive audit tools can make audit information more accessible and transparent. In conclusion, bridging the audit expectation gap requires collaborative effort from auditor, regulator, and stakeholder alike. By implementing this strategy, we can build a stronger, more transparent audit environment and reinforce trust in financial reporting. Thank you.
Hello, my name is Nuralifa Iyana binti Jamaluddin. I will explain the factors of expectation gap in auditing. Firstly, the auditor's responsibility for fraud detections. Usually, users expect the auditor will find all fraud if the fraud causes a business to collapse. However, auditors are not tasked with spotting every fraud, but their job is to provide a reasonable assurance that financial statements are free from substantial misrepresentation. The second factor is users finds it difficult to fully understand audit terms such as reasonable assurance and materiality, that can lead to misinterpret that term and poor financial decisions can lead into question the independence of auditor. For the second last factor is auditors' responsibility for going concern reporting assessment, which means early warning signs that a business might not be able to continue as a going concern are supposed to be given by auditors, such as creditors expect auditors to act as early detectors of financial distress by identifying risks that indicate a business may not be able to continue operating as a going concern. For the last factor is demand for the other assurance services. It means stakeholders frequently presume that auditors are in charge of examining other reviews or parts in the reports due to discussion between management and information about corporate social responsibility are usually outside the audit scope.
It is clear that the audit expectation gap is one of the critical issues in the field of auditing. The audit expectation gap arises when there are inaccurate perception, limited communication, inconsistent quality of work, and the evolving role of auditor in response to social and technology change. One of the serious problems in the EAG is the erosion of public trust in the auditing profession. This is because if stakeholders believe that auditors are not fulfilling their role in detecting fraud, their confidence in the auditor financial statement will be undermined. This will impact the capital market, investor decision, and the integrity of corporate governance. The government need to conduct audit education to improve the public's understanding of the role and limitation of the audit. Other than that, the responsible parties must provide additional training to ensure the effectiveness of audit in fulfilling their responsibilities. That's all from us. Thank you.